person don't know what to do. Florida Talk Real Estate has been your local one-stop real estate shop since 2012. Get the advice you need from your local real estate pros. Here are your hosts, Jim DePola and Johnny C. live on Real Radio.
Good Saturday morning. Welcome to another edition. It's Florida Talk Real Estate. We got you for the next 2 hours of infotainment. And thank you very much for being there. There's choices to be made. Choosing to be with us, one of them. Maybe you're choosing 92.1 or 101.7 on the old terrestrial radio. Thank you very much for choosing one of them. Of course, the free download to your iHeartRadio app makes us worldwide pretty big time. That's another option. Of course, lots of effort happens in the studio in the morning to set up a couple of live streams for you. More choices. Florida Talk Real Estate on Facebook. We live stream if you're there. Thank you. If you'd like to join, go ahead and do that at any time. Florida Talk Real Estate LLC on YouTube. Home of a ton of informational chunk videos and a live stream on a Saturday. If you're there, thank you. If not, join at any time. Of course, if you do join, share, like. Makes a world of difference. You can change lives. I'll explain later. But we thank you for being there. Always welcome to join us. Toll free, questions, comments, concerns in the world of real estate. Want to join into the conversation at hand? Dial in 877-927-6969. The first voice you'll hear, the melodious tones of my producer extraordinaire, my brother from another mother. It's August 1st, dude. How are you?
Hello, and good morning. Yeah, year's flying right on by. It's amazing.
August? Okay.
Feels like yesterday we were just saying, no, the year's half over with June being over.
All right.
Amazing.
August it
There goes
is.
July.
What's up, my man?
Doing well. How are you?
I'm good.
Good.
Good to see you as
bud.
always. Johnny C., that's me, your old buddy, your pal. Let's get your very important people on a Saturday. We'll start off with what we've determined to be the pivotal cog of the Florida Home Pros. That's right. That's right. The cog pieces we've defined.
Jimmy was waiting for that all week.
He was so excited for that.
Of the Florida Home Pros team. Keller Williams Innovations. Hey, Chris Peterson's over here. Look at, dude, that's like a made it status right there.
I
You know who
feel
doesn't
super
have a sounder?
privileged.
Mike Rao doesn't have a sounder.
Can you do it again?
Suck it, Mike. You're in his spot. Got a sounder. Looks like things are changing around here.
That's what I was going to say. Is this like my new spot in the show now, maybe?
Now that there's a sounder playing while you're sitting there? Maybe. Yeah, good to see you, dude.
Good to see you, too. How's everyone doing today?
Really, really well. Always cool to know that we can have a little fun.
Yeah.
And then everybody plays along. And
What it's all about.
Thanks for playing along. Great to have you with us on a Saturday. And of course, our fearless leader, Chris's fearless leader, the leader of the Florida Home Pros team, Keller Williams Innovations. I've told you, 14 plus years now, he runs a top producing Keller Williams team. Ta-da! There's Jimmy D. Jim DePola. How you be?
Hey, I'm doing good, Johnny. I'm doing good. Happy South Florida, everybody. Glad to be here on a Saturday morning.
Yeah, as always. August, by the way. Can you believe it?
It's
I know.
August already?
I know it doesn't matter to you because you're like, what day of the week is it?
I know, it's exactly
What
like
month? What day of the week? It's Saturday, right?
that. Yeah,
Yeah. But yeah, August already, guys.
I
Zoom,
know.
zoom.
It's August. My mom's birthday will be coming up in a little bit. Happy birthday, Mom. Early birthday. I know
Nice.
she's on right now. Hope you're doing good.
You doing a little
Your
celebrating?
mom, Mama Johnny C's on
Yeah.
right now.
Is
So
she?
hi, Joyce. How
Come
you
on,
doing?
love you.
And hi, Elizabeth, and everybody else that's listening right now. I'm assuming that everything's working okay because my internet is horrible right now on Facebook and YouTube. It's still loading since we started the show. So everybody, if you could let me know that everything's okay, that would be great. Guess what we're going to start? Me and Chris just talked about this just before we started the show today. Probably by September 1st. I made that deadline up, Chris, right now.
Oh, nice. Sounds
But
good.
we're going to start having the live stream on the Florida Talk Real Estate website.
Oh, nice.
So that'll be nice, too. So you can go 3 places to watch us.
You just gonna embed like YouTube?
I'm
or
going to
somewhere?
embed the link
Yeah,
over
good.
there.
That's
So
nice and easy.
it'll make things a lot
Yeah,
easier in
yeah.
case there's ever changes or anything.
Well,
it's
that's
right
that.
there.
We kind of brand Florida Talk Real Estate. So if you can drive it all there, that's beautiful. That's gonna look nice.
That's been the goal.
Yeah, that's beautiful.
We've been spending a lot of time on the website. So.
It looks like it's paying off. Congratulations on the achievement so far. Look forward to seeing how it evolves too. Starting September 1st, we'll have that deadline up there.
Yeah, and the site's getting better and better. Chris has been working on it behind the scenes, the Florida Talk Real Estate site. we're starting to get, well, we're getting triple the action we were getting on the site that we were getting before. So that's really great.
Did you say Chris?
Yeah, Chris.
That's
That Chris?
that guy.
Yes, that Chris.
This guy
that
right
Chris.
here.
I'll give him a dog. So go ahead and check out the website and let us know what else you would like to have on there. We'd love to get your input on that. The other thing is we've tried this a couple of times and it's never worked out.
Jimothy wants to know if you can put sports betting up there.
Sports
Right.
betting, yeah, there
please.
you go.
He wants to put in a parlay.
Yeah.
One of the things that we are going to do is, I forgot what I was going to say.
I'm sorry.
We're going to skip over. It doesn't matter. Let's get right into the shout outs if you don't mind.
Let's.
Just get into that. Have a lot of really, as I was going through them this week, it was like, wow, there's a lot of really cool stuff with cool people happening right now. So really excited about that. Carlos closed on his property Monday. From the day he met us until the day he closed was less than 30 days. From the day he sat down with us to decide if he was going to buy, and he was going to buy next year.
Zoom. Huh?
Yeah, and
Wow.
20-something days later, he's getting the keys to his house. It was totally
So he's
crazy.
going to buy next year when he sits, and then just through conversation, understanding, giving a clearer picture of things, he's like, "Well, I don't have to wait till next year."
Well,
or is that totally
Not only
different?
that, he drove to his mom's house one day and saw that his mom's next door neighbor's house was for sale.
And it's like, maybe.
And maybe I'm going to buy now. And that was the pool he used to go swimming in when he was a little kid.
Okay, so yeah, I remember.
Right?
It's
So
coming
he's
back
got
to me
swimming
now.
in that
Yeah.
pool. The next door is a little kid.
Yeah.
Him and his brother would go over there, go swimming, use the neighbor's pool. And he goes, hey, if I could do this one, and he was very zen about it. Carlos is in the health field, home health care and stuff. Very patient guy, really nice guy, very caring, obviously.
Sure.
And he was like, hey, if it works out and this is meant to be, it's meant to be. If not, I'll buy a house next year. No big deal.
Right.
Well, it was funny. I didn't know that he knew the neighbors and it was the next door neighbor. I just knew that he found a house on his mom's street for sale. So when we walked in, the owner was there. And when Carlos walked in and the owner, Frank, was there, Frank looks at Carlos and goes, are you the buyer?
You trying to buy this house? At
And
that
Carlos
point,
like,
I think-
yeah, I'm thinking about buying the house.
Yeah,
And
you
then
kinda-
from there on,
I think you have the inside track. at that
yeah,
point,
it
you
was.
know?
It was definitely
Yeah.
like that.
Yeah.
So, and really great agent that I work with, Lucas, on that one from Remax. He was a very good agent to work with.
Nice.
Couldn't have gone through smoother. Really happy for Carlos. Thank you so much. Now he's a homeowner.
Did that was that perfect? Like both sides, like the
It
seller's
was.
like, I'd really love for you to have this house, and everybody was just like real keen on let's just find a happy place for everybody.
Yeah, and it was exactly like that, Johnny. And there was like a new roof that had to be involved in the thing because the roof was ancient.
Yeah, a lot of things that would require.
So
some
they had to be
negotiation. Yeah.
concessions for that. And then, everything was just really cool because, like, technically when a seller is selling a house, you have to have the furniture out the day before, the day of, no later than the day of the closing. But in this case, they're like, hey, we're not going to have it out. We close on a Monday.
Right.
We're not going to have it out until late Monday night, early Tuesday morning. I hope you're okay with that. The buyer was like, sure, no problem. Oh, by the way, can I have some of the furniture that you don't want? Sure, no problem. So
Right.
just really, really nice experience for
Awesome.
everybody. I was so
Awesome.
happy for him.
That makes it super enjoyable when situations like that happen. That's why we do this.
Yeah.
Yes, and when you have the bad ones, you think about these ones to make it smooth over with the bad ones,
Right.
right?
Evens it out. Right.
Yeah.
Yeah.
Seek balance in the
Exactly.
Oh, that's super cool.
Chris-
Keys in hand. This is a
Keys in hand.
nice.
He's got the keys on Monday. He
Awesome.
jumped in the pool after he was done moving
That's so
stuff
and it
in
was
on
his
Monday.
pool officially.
Yep, now
There's
it's
nothing
his
more
pool.
gratifying than when
Yeah.
it's your pool and you jump into it.
He
for the
was so
first time.
ready. He was so ready. He was the fastest renovation person I've had in a long time. We were going to go sign the documents to close. He already had the flooring guy in there to do the flooring in the master bedroom, right? And the tile guy was there ready to start working.
Bada bing.
We hadn't even signed the documents yet.
Let's go.
So anyway, it was cool. You had a closing on a shout out this week, Chris.
I did. One of my investor clients closed on a condominium down in Hollywood Beach on Friday. So it was just a great opportunity. It was a 2-2, about 1,500 square feet, which is quite large for a condo down on the beach. And the building's been going through some of its concrete restoration work and finalizing all of that. So I would say the building was a good opportunity for an investor.
Did did your buyer have to pay for the assessments that are coming up?
Zero.
So the seller was eating all the assessments.
They've all been paid, yes, and
Great.
all the documentation from the HOA came back, very positive. They have all the funds to complete all the work. No assessments on the horizon. So it's the type of things that you look for to make sure that your customer's not going to get stuck in a pickle.
Were
Okay.
you in competition for this, or did you find a
So this one is interesting.
super gem that no one else bought?
So it actually, when we went and looked at it, and my client decided that they liked it, I contacted the agent, and he's like, "Well, it's under contract," and I'm like, "What do you mean? It's not under contract according to the MLS?" And so we ended up putting in a backup offer. The reason I think he didn't have it under contract was because the financing terms for that other buyer were like less than 3% down on a condo, which is super challenging right now. So we put in a backup offer, waited about 30 days, and that deal fell through. And so our offer was put into number one position, and it took us about 28 days to close.
Nice.
That's a little tip for buyers. When Chris got denied originally for the offer he wanted to turn in, we talked about it, said, if you really want the unit, just go ahead and put it in backup position. Now, what that means is that you're actually filing actual paperwork where you're saying, if this deal doesn't come through, I want to buy the house. And you're going into contract with me right now that if that deal falls apart, our contractual terms
You're taking this.
breathe life
Yep.
into our contract, and you can't go and try to shop it around anymore. We're it.
Right, in a nice position for an investor, right? Because you're like,
Absolutely.
if it happens, it happens. If it, great for me. If it doesn't, all right. I'll
It's
find
also
another
good
That's
for
exactly.
regular buyers too, though,
Sure,
Johnny.
sure,
Just
sure.
in case they're looking and they're struggling. Let's say they're at the very upper limit of their price point or something.
Well, let me ask you a question. How locked in are you on the buy side? Do you build in and out on the buy side? Because if you're looking for a primary and you find another in the meantime, you're kind of in a weird pickle, right?
You could just cancel it.
Yeah.
Yeah, you just say, "Hey, I'm out," and you just let the other side know.
So the sell side is locked in.
Mhm.
The buy side, you still have a little bit of exit clause.
Yeah.
All right. So
And,
there's
and
really
what you
no
try
risk
to do is you try to not pay any deposits, any escrow deposits, or start the inspection period until after your offer
until you're in
is
green
really
light.
in contract
Right.
at that point.
Yeah.
But
makes
anyway, it worked out. That's exactly what happened here. The deal fell apart. If they hadn't done that, who knows? There could have been somebody else that saw it was a good deal too.
Yeah.
You would have been competing. So that worked out really well.
sense. Yeah.
Yeah. No, it's a
the-
great deal.
The
Beautiful.
other thing is when you say,
Now, quick question.
Sure.
Is that would just be like laziness, not understanding? Like you're saying, hey, tip for a buyer. Now you're doing it as this is a well-represented buyer, right? And understanding how you should be positioned. Is that not common for
It's
agents
not
to
as
do
common
that?
as you think it
Yeah,
would be.
I
And
feel like
even
that's what you're saying.
buyers don't want to do it. Sometimes they got to kind of really goad them.
And that's why I'm asking, like, how locked in are you as a buyer? And if you're not especially if you're not putting money in escrow and you're not like, here, hold this while I'm in backup.
Yeah, it's
that's
almost
no
like
risk.
You still have all your.
It's almost like a rainy day check. You know what I mean? There
Right.
not that much obligation
you
to
not?
it. Yeah.
It's kind of like a deposit without a deposit.
Yeah.
Right.
In a
and,
sense.
and the other thing is during the inspection period, let's say that you did get locked into it. During that inspection period, you can cancel during the inspection period for any reason, including no reason at all.
Right. I just
So-
don't want it. Thank
Right.
you.
And
Yeah.
you don't even have to do an inspection during that time, right? You could just say, I don't want it, and you're out. So it's really more to lock in the seller so they can't go shopping around on you in case the deal falls apart.
Mm-hmm.
But anyway, that
Great
was
job.
a really good one. But I wanted to ask you, Chris, when you said in the Hollywood Beach area, tell me about the location of the property. Like, are you
Yeah.
right near the Broadwalk and everything?
Just about 2 blocks south of where the current Broadwalk ends. So the paver
Mhm.
walkway, it ends. There's a little parking area and then a park, and it's literally on the other side of that park. So it's you're basic. It's a great location because you get all of the amenities of everything that's amazing about Hollywood Beach and the Broadwalk area, but you're just far enough away from all the noise and the chaos. So it's like this peaceful, tranquil area. And I probably shouldn't say that online because now I'm going to ruin it. But
And you just stumble into the chaos.
yeah.
right?
So this particular building is, ironically enough, it's the building exactly behind where I have a condo on Hollywood Beach. And so I've been watching this building for a long time, and I thought, man, I bet I know somebody that would want that. And so it's right on the corner of Ocean Drive. You have views of the Intracoastal as well as ocean views, so you get the best of both worlds. And it's from that building to the beach, it's probably 200 yards, maybe. and there's an accessible path right there, right to the beach.
2-bedroom, 2-bath.
2-bedroom, 2-bath.
It's rentable eventually, right?
Immediately. So that was
can rent it
that
anytime
was
you
the
want.
appeal to this property here. Is the HOA had basically done away with any and all rental restrictions, with the exception of a minimum length that the contract term must be. And so it doesn't accept like Airbnb or anything like that, but vacation rentals or long-term rentals, you can rent it immediately upon ownership, which is precisely what my client is doing, because this unit was the previous owner was an investor. The previous owner had a tenant in place, and it turned out through a weird series of coincidences that my client actually knew the tenant that was renting, and so it was just ended up being the tenant didn't have to move.
Story, right?
The tenant didn't have to move, and it just went from he just signed a lease with the new owner, the new landlord.
That's so wild.
So it was a pretty wild transaction.
And automatic income.
Absolutely.
For them right away.
Yep.
Don't have to do anything to the unit or anything. Just start collecting the rent.
Start collecting the rent, and
So flip a switch. That's amazing.
I know. So if you're interested in looking at those kind of type of units, and by the way, Chris, 2-bedroom, 2-bath, steps from the beach, 1,500 square feet, building, concrete restored, if you will. How much is a unit like that? Without getting the exact price, because
for sure.
Did it start with the 3 or a 4 or 5?
So if you're on the beach, a 2-bedroom, 2-bath in that price range, you're usually in the 5s as a starting point. A 1-bedroom in a lot of Hollywood Beach area, 1-bedroom, 1-bath, they're consistently in the 3s to 4s. So my client got this 2-bedroom, 2-bath, mind you, twice it's about 1,500 square feet. So most of your 1-1s on Hollywood Beach run about 600-700 square feet is kind of typical. So this is my client basically got 2 apartments for the price of less than what the average 1-1 is going for. So it was low 3s.
Low 3s.
Low 3s. Yep.
So very easy to rent that out later if you
completely.
wanted to turn it into
And my client did a DSCR loan, as we've talked about those in the past several weeks. So
that service credit ratio.
Exactly.
If you listen every week right now,
you get it.
you better.
It only took 4 weeks.
But be impressed. That's effort.
That mortgage product is where they don't really care so much about the appraisal of the house, a little bit of your credit, but it's more that
it's the rentability.
You could rent it out for the same price as the mortgages.
Yeah. So this one here, the rental values in the building came back a little bit low, just because the building is still going through the construction, and one of the risks in some of the you have units in the building that you have some that are renting for $4,000 or $5,000 a month, and then you have others that are down in the low to mid 2s, right? So you've got a really wide range of rental prices, but the way they appraise them is they look at more the average. So the rentability of this property came in the mid 2s to 3. So it ended up not making the right ratio for just putting 20% down on the property. So my client ended up putting 5% more down. So they did 25% down, and they were and then in that condition, this particular investor was for the loan side of it was willing to kind of waive the rental requirement.
Right. And that makes the mortgage payment even lower with the 5% down. It makes
Absolutely.
it even better.
Yeah.
So that's really great. Just a couple more shout outs. I want to give a shout out to Loretta. We just put her villa on the market. Can't even, it's such a blur.
I think it was Tuesday.
think it was Tuesday. I think
Monday or
you're
Tuesday.
right.
Yeah.
It's a really great community called Aberdeen. It's one of those membership equity communities that are dotted throughout the area. With this community, you get a championship golf course, tennis and pickleball, state-of-the-art fitness center, 4 restaurants, right? 4 restaurants in the community. You don't even have to leave this community to do
Right.
anything other than maybe shopping if you had to.
You don't have to go far.
No, you don't have to go far. Our side in our villa, it's gated. Some of the other areas are not gated. Our villa is gated. It's a 2-bedroom, 2-bath with a den.
Nice.
The developer calls these a 3-bedroom, but it doesn't have a closet. So I'm just telling everybody right now. And most of the people advertise their unit.
They call
as,
the den a bedroom.
They
but it
call
doesn't
the
have a
den the
closet.
bedroom.
I love a den.
And the developer called it that too. So everybody says they have a 3, but really what they got is a 2-2 with the den.
Right.
We put ours down as a 2-2 with the den because the seller's like, I don't want people coming over here and the first thing they say is, this isn't a 3-bedroom. You know what I mean? And we don't want to go through that. So wanted to give a shout out to Loretta. We had our first showing, I think, 2 days after we put it on the market. Now, what makes these units unusual and a little tougher to sell than some other units is that it's a membership equity community.
Mm-hmm.
So in order to get all those amenities I just talked about with the golf and the restaurants and the state-of-the-art fitness center and all that stuff, not including all the social activities they have in the community, is that you in this villa, you have to pay $90,500 along with the purchase price of the house in order to move in because that's called a membership equity.
That's a one-time payment, right?
That's a one-time payment, but then every year you have to have some type of social membership on top of it. So social membership could be as little as just paying for restaurant service for the year, all the way up to full, which means you have full access to tennis, racquetball, and the golf course, and have all that included together. And there's different levels of annual memberships on top of it. But this unit, 2-bedroom, 2-bath, a den, updated kitchen. The unit's in very good condition. The community takes care of the roofs. This has a lake view. It has a lot of upgrades. It's got wainscoting. It's got crown molding everywhere. The unit looks like when the people came over to see it, they had looked at 3 other Aberdeen properties that day. It's like, your house is immaculate compared to the other houses we just saw.
Nice.
And that's to Loretta. She keeps a really good house.
It's going to stand out.
But we only have it on the market for $250. So even with the social membership, you're paying under $350 to live in a community like that. And if you love golfing, this would be a great place for somebody who wants to live there full time, right? Because it's relatively affordable for these membership equity communities because of the pricing of the home is lower. But the other thing that's great about it, if you don't want to use it all year long, it's relatively inexpensive. It's almost like you have a multi-million-dollar lifestyle, like a multi-millionaire lifestyle, without paying multi-millions. So if anybody's interested in Aberdeen and Boynton Beach, give us a call.
Nice.
We'd love to talk to you about that.
FloridaTalkRealEstate.com. FloridaTalkRealEstate.com.
Now, I also have the 2 other really nice stories, too. I had a call from a guy named Joel. He and his fiancee, Chris Ann, have been renting for a very long time. They just have a 1-year-old boy.
Oh.
It's time to move up and get a bigger home for their family. So they called us up. I think they called last Saturday. I talked to him on Monday. We got into Mike on Wednesday or Thursday. Mike Rao from the mortgage firm. He'll be back next week. And he got him totally qualified through the mortgage app, the special personalized app that we use. And he was approved yesterday.
Such a great
He got approved yesterday. So I sent out a shout out to Joel and Chris Ann and just said, hey, we got to set an appointment next week and get the home buying process started. So he's super, super excited. Can't wait to work with them. First time home buyers.
How about that?
Going to be getting down payment assistance. Really excited about that.
Yeah.
That's awesome.
Then we have.
Can't wait for that shout out.
Yes. And then we have another one that's almost on their way to getting approved. John called me up just recently. He and his significant other, Lisa, say it's also time for them to buy. They just feel it's time for them and their family. I don't remember if it was Joel or John, but one of them was renting for a very long time, and the landlord is saying it was time that they want to sell the unit. So it was time for them to move on. I don't remember if it was John and Lisa or Joel and Chris Ann, but one of them went through that. John saved a lot of money. He has a big down payment. He also is going to qualify for down payment assistance program. We just got him over to Mike right now to get pre-qualified on everything.
Nice.
I think by Monday, Tuesday, he'll be approved. We're going to be running around trying to look for his new home
That's
for
exciting.
his growing family.
Yay.
So really excited. Just a lot of really, really good stuff that makes me feel good.
That's all beautiful. And if you're looking to do just that, buy a home, sell a home, stuck with a home, you don't know what to do. If you're looking to have a professional guide you in anything that touches the world of real estate, always remember FloridaTalkRealEstate.com. We're on Facebook, on YouTube. Share and like. You can absolutely change lives, including your very own, with the pros. FloridaTalkRealEstate.com.
Just because we're going to take the break at 9:30, you're pretty close to it, so just kind of keep an eye on it. But since we got just a little bit of time, I want to just talk about something that I thought was kind of interesting, because something happened to me with a buyer that I went out with last week. Her name was Marisa, and we went out and took a look at a bunch of 55 and over communities. And I misunderstood what she had said about her age, and I thought that she was turning 55 later this year. So I felt like if she's looking at 55 and over, which is a very affordable way to go, that she would be grandfathered in because she's so close to 55. But I was a year off. She'll be turning 54 later this year, 55 next summer. So we found a house. She fell in love with it last Saturday. And we can't buy the unit because they won't take somebody who's 53 years and 11 months.
Yeah, I think it's amazing they'd give it to you 6 months ahead. I mean, if it's a 55 and over, it's like, you know what that means, right? It says 55
Well, it's
and
funny.
over.
It's funny that you say that, but that isn't the way the federal regulations are. The way the federal regulations are is that there's an 80-20 rule. And the community has to allow up to 20% of the homeowners that are living there to be under 55.
Has to allow.
Yes.
Really?
Now, there's some
I
great.
didn't know that.
Yeah, and a lot of people think the opposite. Like you two are the first ones I heard that thought that it had to be 55.
Well, that's
A lot
what
of
it
people think
says.
that they're
why-
grandfathered in.
I don't know why I would believe that.
And it says
That
55
feels
and over.
ridiculous to me to just make that up.
Yeah,
Well,
well, I remember when my parents bought theirs and it was a 55 and over. My mom was old enough, but my dad wasn't. So, but because she was, it was that's all you needed. Was
My
one of the
grandparents lived in a 55 and over
Right.
in Fort Pierce. My mom lived in it forever, and I've saw situations where somebody would die and then the person that would inherit it would be like 45, 49, and they're like, no, you can't live here.
Oh, well,
But what that tells me is they already had the 20% cap already hit, probably.
Well, sometimes yes, sometimes no. Because I was looking up. Part of the reasons why I'm bringing it up is because when the community said no, and I asked about the 20% rule, the people started getting huffy. Like the property management group, they started getting a little like off put. I can't believe you're asking these questions. So I go, well, what about the 20% rule? And they go, we reserve that for heirs that are buying properties. However, one of the other reasons I brought up the 55 and over, did you hear about the young woman that was in Florida who inherited her father's property who died? And she was like 28, and she was the father's caretaker. So while he was
She lived there.
going through there, she lived there for years.
She resided there
and for years.
Yeah, it was her home.
So one of the things the father wanted to do as a thank you for her taking care of him is to leave the house solely to her, and really wanted her to be there. But she's 28.
In a 55 and
In
over
a 55 and
community.
over.
Yeah.
That's not a good plan, right?
Well, that's where you just prop dad up like Weekend at Bernie's. And you're like, we're good.
Oh, you mean the Mitch McConnell thing?
Exactly. You McConnell him a while.
Sorry, man.
You're like,
Sorry,
hey,
Mitch.
I'm staying here.
But the thing is that I couldn't
Allegedly.
believe when I was reading about it in the news. It really took off in the news. This thing was popping all over my news feed. And I was like, why is this a big deal? Of course, if you're 28, you can't just stay at a 55 and over. However, when I went a little deeper to like find out what's really going on, because I wanted to refresh myself, here are the things that could happen in the 55 and over. If you're in a 55 and over community, yes, there is a federal regulation that allows up to 20% of the people not to be 55.
Allows, but doesn't mandate.
No, it isn't mandate. No, but you have to allow.
Allows. Okay.
But so if somebody comes in and you don't have the 20% and they say, I want the exception, you might have to grant it as the community. It isn't like you get to pick and choose because that's discriminatory. You have to have certain ways to handle it. So, for example,
That's funny. I've always felt that way about it. I'm like, well, I'll accept it, but that's discriminatory.
so yeah, so
Well, I'll
some,
accept it. It's
The
fine.
devil's in the details.
yep.
Yeah,
So
yeah.
some of what happens with some of these is some of the communities built in say that nobody could be younger than 48, where they'll put like a limit of how young you could be to be in the community at all. Some of them say if you're not at least 18, you can't be in the community. And that some of them say, like what Jimmy's situation was, Jimothy's, where as long as one of the spouses was of age, right, 55 or over, if they're married, the spouse could be younger. But sometimes the spouse can't be younger than 48. I'm just using that as an example.
Oh, just arbitrary number.
Yeah, so if somebody was like a sugar daddy, right?
It's exactly what I thought. I'm like, man, there's websites for this. That's how you work around. A
So
condo
it's just kind of,
associations.
yeah, so it's just kind of interesting. It is kind of interesting about this 55 and over stuff. So you have to be very careful about it. I've never really had a problem with the 20% rule, as long as you're very close. Like I've had people buying in 55 and overs at 53 and not really have any problem getting in. And the community was like, sure, we don't have a problem. We know you're going to be 55 soon enough. But you have to be a little careful on that. But the 28-year-old, she ended up losing. The board she sued, right? She sued. She's like, I want this house. I want to live here.
Yeah. You're making me homeless right now. Thanks for taking
that's
care of
what
your
her
dad
argument,
forever.
right?
Yeah.
And she was pretty PO'd.
Yeah, I get that. I
So
probably
she
would've
went to
sued
sue. So the community had a choice. They could either buckle under and just agree to let her in,
too. Make an exception.
or they went and asked for an assessment from the community to pay $225,000 for the lawyers to fight the lawsuit. So the community voted last week, and they voted to go ahead with the lawsuit, and they're kicking the girl
Oh,
out.
so everybody in there is like, sure, we'll chip in, get her out of here.
Yeah, they all want her out. So that's what happened with
We
that
won't
one.
pay for any, future assessments. Do not raise our.
Somebody didn't like her.
No. A bunch of them didn't like her.
So I
It's
just
probably
thought
just
that-
her age more
I
than
just thought
anything,
that was
though,
kind of interesting on 55 and over. So I figured we'd burn a couple minutes to just
Damn.
talk about that a
No,
little
I
bit.
think that's a worthy conversation. I learned. Yeah.
I'd love to learn. I mean, it sounds like it's a very open-ended type of a quote-unquote rule or law.
Well,
I
it
mean,
says allows, not mandates.
Yeah.
Yeah. So I think it depends on who runs the HOA.
You have to be careful too, because a lot of the HOA languages out there are vague and not always so clear, and that's why you get so much interpretation of the different rules and why there's so many lawsuits around. these
Well,
things
Well, and
sometimes.
I think often it just allows for a lot of just personal.
Well, I found a loophole,
Yeah.
right? I found a loophole in it. So if I ever got really rough and tumble and somebody really wanted to get in the community, if the community doesn't do a survey, an
You
actual
want to share
survey
this on the
of
radio?
how many of all the ages of everybody living in the community and then doing the ratios, if they don't do that once every 2 years, they're not allowed to be a 55 and over community, even if they've been a 55 community for 30 years.
You have to maintain. You
It's
have
like
to
a-
have
a-
a. You have to have an
maintain
official
it.
record of
Mhm.
age demographics.
Like
Yep.
a census update with every 2 years, basically.
Every 2 years, you've got to go into the community and do a census, not Census Bureau, but a census demographic.
for
Proper-
your
a
HOA.
paid survey.
Yeah,
You have to
so
have a proper
my thing
independent
is,
survey.
I'm wondering if I've never done this before, but now I'm going to keep this little tool in my back pocket, and if I ever get a situation where somebody really wants to go there, I'm going to say, property manager, produce your two-year demographic survey, and
But
if
that-
they can't,
But all
if they
that's
can't, I'm going to say, nope, you can't deny us. That's discriminatory.
well, no, they can, because all that's going to do is just give you an ability to sue them. Now you're going to have to turn to your buyer and be like, "You want to sue your way into here? Because this is going to be clogged up in court forever."
You never know. People might do it sometimes.
People
you know?
sue for some crazy reasons.
Oh, true. That's true. But that doesn't mean you're just getting right in.
No, it
Yeah,
doesn't.
No,
But anyway, I
because
just thought that
they
was
may
funny.
collect $250,000 to fight you from getting in there. As
Exactly.
we just heard. Yeah.
Exactly.
I know a homeowners association. It was a condo building or a co-op building, and they didn't allow dishwashers in the kitchens of the units. And this lady, she's like, "I want a dishwasher." She sued the association, and she won. So it's
Interesting.
now, guess what? There's
Everybody
dishwashers allowed
allowed
in the association.
So I'm sorry, did I miss what happened with your client that was not
We
turning
ended up-
until It was 53.
3 of the agents that we showed properties, because there were so many choices for her to go in there, I kind of let all 3 agents know that my buyer was interested, but we were told by the property manager and a condominium assistant that we can't do it. And 2 of the agents were like, yes, you can. There's a 20% rule. And I said, well, they're saying that we can't use the 20% rule. And I said, so if you could figure out a way to fix it, call us back because we would be interested. But they both came back and said, no, you can't do it. So,
And as a seller, you should be motivated to go to your association and be like,
Exactly.
what do I got to do here?
Yes,
I got to get a buyer
exactly.
here. Yeah, and they're close. Like, come
That's
on.
if it's really a property that you want to get into, I mean, that's why you got to reach out to proper legal channels. Some people that are experienced in doing
yeah, that's true.
The
That's
good news is the Florida Talk Real Estate team does have some
We know
really,
those people.
really good legal channels.
Pivotal Cog knows how to turn it around and do that little
What?
fix there.
it. We know those people.
We know those people. Yeah, that's right. He knows to go to the guy with the name on the sign too. By the way, every time this is Paul Krasker. I'm going to call Paul. We taking a break.
We are going to take a break. On the flip side, what we're going to talk about is foreclosure changes, what's happening in the foreclosure market. Lots of headlines about huge foreclosure increases going across all over the country, especially Florida. We're going to talk about, is that really what's happening right now? Yes or no? We're going to get into that a little bit. I think it's a lot of interesting stuff. And how not to get burned if you are in trouble with your mortgage.
Very good. Lots
Because
of
a
good.
lot of the scam companies are back, John.
They're back.
Oh, well, of course.
Yeah.
If everybody's scared,
Yeah.
it's time to scam. Welcome to America. Let's do a 4-minute reset. We got lots of information. Today's the first day of August. We are live on this Saturday. If you're with us streaming, thank you very much. If you're not and you're like, hey, I'd like to check that out, always remember on Facebook and YouTube, we do live stream on a Saturday. And while you're there, lots to consume, share, like. You can absolutely change lives if you're putting somebody onto the pros, the experts at FloridaTalkRealEstate.com, a team of professionals that work cohesively together. And if you are buying a home, selling a home, stuck with a home, you don't know what to do, you just need professional guidance in anything that touches the world of real estate. Trust me, you got the best of the best, one click away, FloridaTalkRealEstate.com. There's a hotline. You can call it if you'd like, 888-973-7828. If you're old school and prefer to pick up the phone, go ahead. But of course, if you go to FloridaTalkRealEstate.com, there's a contact page. Just get the ball rolling one way or another. When you need the best of the best, we got them for you. FloridaTalkRealEstate.com. Back in 4 minutes. Thanks for being with us every Saturday right here. It's Real Radio.
What's a Real Radio podcast? It's Real Radio on demand. Find your favorite show at realradio921.com. Here's what's happening with the weather on Real Radio.
I'm meteorologist Charlotte Carl with CBS 12 News. We are going to continue to watch as clouds roll in. Temperatures won't stop climbing, though, until we get the showers and storms to arrive, which will be around 2 or 3 p.m. this afternoon, just depending on where you are. We will see heavy downpours later today, and then by dinner time, and the time the sun sets, skies will start to clear out.
This report is sponsored by RockAuto.com.
Ooh, Ben Tyrod, what are you going to do?
I'm way ahead of you. I'll be on RockAuto.com before you can even finish this commercial.
He's right. RockAuto.com. Parts when you need them.
Hey, it's your boy Johnny C here, host of Florida Talk Real Estate. They're tops when it comes to helping people buy and sell houses. But Florida Talk Real Estate is so much more than that. For 5 years, I've watched these guys help thousands of our listeners with any real estate need. They couldn't do it without their sponsors, who are experts in their fields. Check it out. Jim DePola, powered by Keller Williams Realty. Their team specializes in helping people sell their house for top dollar, and buyers get great deals on the purchase of their home. That's what they did for me and my family, and I couldn't be happier that I hired them for my real estate transaction. Mike Rao from the mortgage firm is one of our favorite guests on the show, and he is the mortgage guy. Whether you're looking for a refi or a mortgage to purchase a new home, Mike Rao will get you the answers you need. The mortgage firm is licensed to do loans in Florida, Alabama, Tennessee, and Georgia, and they have local offices that cover all of South Florida. So if you're thinking about a refi or a new mortgage, go to the mortgage guy, Mike Rao, and find out what he can do for you. The Mortgage Firm, Inc., NMLS 189233, Florida license MLD 78, equal housing lender. The law office of Paul A. Krasker has been specializing in real estate law for nearly 25 years and has the professional team you need. upside down with your house? Paul's team can help you conduct short sales, loan modifications, even if you're behind on payments. They also help you with foreclosure defense and bankruptcy. They can even help you get a student loan modification and repair your credit to get the score you need. Paul's full-service team has helped thousands of our listeners, and they can help you too. Trident Title LLC is the largest privately owned title company in Florida. When you need a title company to complete a refi, home purchase, or sale, Trident Title has got you covered. Not only do they offer competitive pricing, Trident Title has attorneys on staff to make sure if you have bumps in the road declaring title that you can get the job done. Beware, not all title companies in Florida have attorneys on staff. Trident Title does and complies with all the new federal regulations released last year. Ross Camaronets, owner of Brightway Insurance, has been helping our listeners get great rates on homeowners insurance plans. Haven't checked your homeowner's insurance policy in a while? This is a great way to help reduce your monthly mortgage payment. Ross can also help with renters and auto insurance. Ross is only a phone call away and can usually get the answers you need same day.
Call Ross today at 561-425-6228 or drop by his office at 873 Donald Ross Road in Juno Beach.
So now you know why I'm happy to be part of the Florida Talk Real Estate Show, the longest running real estate show in Florida. And all these sponsors are just a phone call or a click away. Just call 888-973-7828. That's 888-973-7828. Or go to floridatalkrealestate.com. That's floridatalkrealestate.com. And don't forget to use the most accurate search engine to find your new home or ask for a free home valuation because floridatalkrealestate.com has you covered. That's floridatalkrealestate.com.
Real Radio 92.1. We are an iHeart radio station. This is Florida Talk Real Estate with Jim DePola and Johnny C. Got a question for the show? Call us live at 1-877-927-6969.
Awesome to have you with us on a Saturday, 9:42, working our way through. It's the 1st of August already. Crazy how time flies. But great to have you with us every Saturday. Us, it's me, Johnny C., your old buddy, your old pal. And of course, if you choose to dial in at 877-927-6969, you'll be greeted by the best damn producer radio has ever seen. And we're lucky to have him on a Saturday. It's Jimothy right there, my brother from another mother.
Hello, hello, and good morning. You know what it means, though? August 1st, we're not far away from football season.
Brother,
No, I think of it.
it's training camp on the TV right here.
Yeah.
I am the most distracted I've been in weeks.
Yeah,
It's
yeah.
terrible. But
College starts, what, 3 weeks?
Yeah, it's time to get into the warp zone known as football season.
Yep.
Where we will blink and it's
And-
freaking New Year's.
Well, New Year's, February.
Yeah, and then there's the Super Bowl. Yeah.
Same concept.
Time to time warp.
Don't forget about hockey is right around the corner too.
Oh yeah. Well, you know hockey gets buried in the football chaos, but yes, of course. Time for
He's so
puck to drop.
Minnesota.
I am.
Who are you back? Let's get some introduction going here. Of course, we have a pivotal cog in the Florida Home Pros team. Chris Peterson's right over here. Who do you pull for in the hockey, or just in general? Who do you pull for?
So I've been
Jimothy, keep your mind out of the game.
I've been a Colorado Avalanche fan since I lived in Denver, Colorado, a lot of years ago.
Nice.
And everybody assumes I'm a Stars fan because I'm from Minnesota, and I'm like, because everybody forgets that the Minnesota North Stars were moved out of Minnesota to Dallas and became the Dallas Stars. But the people of Minnesota didn't want the team to leave. The owner wanted more money, so he moved the team. So, yeah, I kind of hated the Minnesota North Stars, and I carry on that hate for the Dallas Stars too. So
Yeah, so
sorry if you're a Dallas Stars fan. I mean no disrespect.
You either stick with that team and you go there with them, right?
Yeah.
Football analogy. I grew up a Cowboys and an Oilers fan.
I got you.
And when Bud Adams took his team to Tennessee, they were the Tennessee Oilers for like the first year. I have a Tennessee Oilers shirt.
Nice.
And then they became the Titans,
Yep.
and the rest. But that's the Oilers. That's still owned. That's why we don't have the Houston Oilers right now. We're the Houston Texans
They had no rights
because
to
they
the name.
own that. That's right. That's why the Baltimore Ravens are the Baltimore Ravens, not the Baltimore Browns. The name was owned by Cleveland. But if you're an old school Browns fan, you might be an Art Modell fan.
Yeah.
And be a Ravens fan if you stuck with that team.
Oh,
Or you're like, screw that team, like the pivotal cog was like, screw that team forever, Dallas. That's cool. But Lynch fan. All right.
Yeah. And
you root for the Panthers at all?
Absolutely.
Okay.
So I started, I'm a huge Panthers fan as well. And when I moved here, that was right before the Matthew Tkachuk trade and everything happened. And I was watching that team. I'm like, oh, they're getting good.
Yeah.
They're getting good. And you could just see the chemistry hitting. So it's been a fun few years.
So if you like the sport, you absolutely watch that. You seeing that come together for them. The President's Cup was a bit of a nightmare, but you knew it would be because it always is.
It almost always
is. Kiss of death. But that's if you like the sport, you appreciate the game, you watch that evolution of the Florida Panthers. Man, that was awesome. And if you're a Panther fan, congrats. That's been a great run for you. Even if you're new to them, that's fun for you. But
I've converted a lot of people here in Florida into hockey fans because they just never. They're like, oh, football and basketball. I'm like, watch hockey.
Football's amazing.
Yeah, it is. Don't get me wrong. I love it.
HD changed hockey.
True.
Yes. Before HD, hockey was not even worth consuming on television. It was horrible.
I was fortunate I fell in love with hockey because I went to games when I was younger.
Totally different.
And so it's like in the arena versus on TV, it's still just
different beast.
Totally different.
Night and day.
Yeah.
Night and day.
Yeah.
And I don't mind watching it on TV. Don't get me wrong. I'm not trying to say that, but I will say there is nothing like if you like to see live sports and you've never been to a hockey game,
go.
Boy,
it's nonstop action.
Yeah. Mm-hmm.
I mean, they're doing everything that all the other sports are on little tiny blades.
Yeah, my kid couldn't care less about sports, but totally like, you want to go to a hockey game? Yep, that was fun. Yeah, for sure. Great to have you with us.
Glad to be
hockey fan, and of course Jimmy D, the fearless leader of not only the Florida Home Pros team, but all of us here on the team. Keller Williams, top producing team. There's Jimmy D. Jim DePola, how you be?
Hey, I'm doing good. I'm doing good. I'm just pulling up some stats for what we're going to be talking
hockey
about.
Stats?
Yeah, we're going to what? What did you say?
Hockey stats?
No, not hockey stats. No, not hockey stats. But I wanted to go over a little bit about foreclosures and what happens to you when you go into foreclosure. How do you deal with the foreclosure? How not to get ripped off by a foreclosure.
What you do. You bury your head in the sand and pretend like it's not happening.
Yeah, exactly. How many times do we see that?
I heard you just get to live there for free.
Yeah. Oh, you get the house for free too because they don't have the note.
Yeah, I remember those days.
Yeah.
I wish I would go into foreclosure.
And it was funny because Chris brought it up because he said he saw a report from Arizona talking about this big foreclosure spike across the nation, and there is some truth to it because there was some forbearance rules and regulations where the deadlines are ending right now.
Oh.
So if people remember all those forbearances, we had the hurricane forbearances and the COVID forbearance, all those. Well, they had a deadline. So you were in that forbearance for a certain period of time, and when the deadline's over, they're going to start the foreclosure back up if you don't take care of your bills. What did you see in your report, Chris? And then I wanted to go to the MLS and just talk about what's really happening in real life down here.
Yeah. So the data is a little mixed. I mean, it's certainly you're seeing the headlines. Foreclosures up 21%, and specifically to the
21%.
Yeah, year over year. But you're talking 21% of sub average annual numbers. So it's an alert, right? You got to pay attention to those things. I'm not dismissing it, but I think what I was also coming across is there's people that are starting to talk about, so this forbearance ended back in May sometime. And so now there's a bunch of people out there that are saying that there's a huge new wave of FHA loans that are entering into the pre-foreclosure process, and they expect a surge over the next 12 to 18 months. Some of the numbers vary widely. I think it's people making certain assumptions based on numbers and so forth, but I think that there's the potential that we could see a surge in these foreclosures. But again, the question comes back to, is it how is that over the total numbers, right? So every state's a little bit different. The numbers are a little bit different. I think we'll jump into those here a little bit more. But that's kind of the what we're starting to see the noise on.
Yeah, but so I guess the reality is in the numbers, right? If there were 500 foreclosures and it went up 21%, we're at 600 foreclosures, right?
Yeah.
Exactly.
Right. So, yeah, that it can seem alarming, but it is one of those things that you should pay attention to. What do you think's is it do you think that's the sign that people they've reached the end of their credit limit? Or do you think it's a sign that we're just kind of getting a little bump from the forbearance?
I think it's
Because
a little
the forbearance was not appealing. It was we looked into it. We
right.
did
We
it as a
told
team.
people if you didn't have to do it, don't do it. It's just going to suck you into a hole.
You're kind of screwing yourself. But if you have to, obviously,
Yeah,
do it.
sometimes you have to do it. I think it's a little bit of both, Johnny. I think some of this is the forbearance coming around and like it's time to settle up with us, and you kick the can down the road far enough. But I also think part of it's the economy.
Because you remember years ago when we kind of saw that big HELOC bubble come? The effect of that didn't seem to wash out as alarmingly as kind of maybe we were led to believe.
I don't think that this is going to turn into a huge foreclosure crisis that we're in right now, but I think that we're going to see normal foreclosure is 1 to 3% of the total market, right? 1 to 3% is your normal foreclosure rate. Right now in Palm Beach, well, actually the whole MLS for us, which is about
6 counties.
Yeah, well, actually, yeah, probably about 6 counties. There's 49,504 homes for sale right now on the MLS, and out of those, 1,194 are foreclosures or short sales. That's 2.4%. Normal foreclosure rate, meaning it's a totally normal market. In a totally normal market with no high inflation, low inflation, good employment, right? No bad unemployment, is 1 to 3%. It's just a normal part of living. People get divorced. People lose their jobs. They get transferred, and their houses don't have enough equity. People get sick, right? People die. All of those are reasons why things go into foreclosure.
Right,
So that's
life.
normally 1 to 3%. So we're only at 2.4%. Now, a year and a half ago, when we started looking at these on a more regular basis, we were at 0.5%. So we have increased.
With how many homes on?
Actually, they were closer to
I was going to
60,000.
say there were
More homes.
More homes, less foreclosures. So good
on a
question.
percentage basis. Yeah.
So 0.5%, and now we're at 2.4, but let's just say 2.5. That's 5 times the amount. We could say in foreclosures over the last 18 months increased by 500%. Oh my God, right? That
Yeah.
sounds horrible.
Sounds
Super alarming, right?
But when you think that the normal market's only 1 to 3, we're still not even, we're at the upper end of a normal market right now. So I don't see anything right now that's going to have a complete implosion. It's like we have PTSD related to that crisis that we went through, which was only 2 cycles in our, since the Great Depression. We had the Great Depression and the Great Recession. And we really haven't had anything like that anywhere other than those 2 cycles, right, during the history of the United States. So people still think to those days like, will that happen again? It could happen again. But right now, the statistics just aren't there. Now, just to give you an idea,
The yield on the 30-year mortgage bond is alarming at this point, though.
I'm sorry, repeat that.
The yield on the 30-year mortgage bond.
Well, we're
is
going to get
alarming,
into
though.
we're going to get into all that just a little bit. I just want to focus on foreclosures,
Sure.
but we will get into
But
the market.
you're
'cause-
talking Great Recession, Great Depression, like kind of eras. The inflation this week, the Fed did nothing, right, which was the right choice. I think everybody in this room would nod their head
Right,
and
I agree with that.
because inflation's
Yeah.
out of control still. The market responded a little bit, but what did respond was, if you just look at the chart for the 30-year, it's a rocket. It's a candle going straight up right now. But just talking comparatively of kind of overall depression, recession, we're not in that right now, but there's little like warning lights kind of coming on, you know what I mean? And it doesn't mean things are bad. I've had a warning light going in my car for 7 years. It starts every day.
So oh, I did this the wrong way.
And my check liver light came on like 12 years ago. I'm still here. You know what I mean? So,
12.
Yeah, so it's we definitely have to keep an eye on it because I don't feel like we're in a super healthy economy right now, without a doubt. I don't think so. I think it's a lot of shakiness involved,
Sure.
and it could go one way or the other. But right now, we've been holding tight overall, relatively speaking. But I'm being real about this. I'm getting more and more phone calls from people that are having financial problems.
Well, it's because
And
we're credit based and the
we're
credit's
very leveraged.
running out. It's gone.
And there's a lot of
30-year.
older people that are really feeling that costs are increasing so fast that they weren't prepared for it, that they're trying to downsize, right? I don't need this big house anymore. I need to downsize and get into
I need to
something
pay less. I
smaller.
don't
I need
need
to
all
pay
this.
less
Yep.
to protect their future costs from rising,
Right.
right? That's a lot of things. Another thing is people's jobs aren't as secure. I know that unemployment really hasn't really reflected that, but that's because they're kicking a lot of unemployed off the unemployment statistics where the people just gave up looking for jobs. There's a significant amount now that are really coming out about that. Johnny's always had a radar about that, but now it seems really significant. So just to give you an idea, though, so here are some things about foreclosures that I think are kind of interesting. I went back for the last 7 months, looked at all the foreclosures that happened in our MLS, right? Just foreclosures, not short sales. And I thought there was something that would be interesting. I'm going to go back to the most recent foreclosures that we had. So the most recent foreclosure closing was today, 8/1, right? And it was a Pompano Beach single-family home. It was on the market for 1.65, and it closed for, I'm sorry, it started out at 1.85. It dropped down to 1.65. It closed for 1.485, right? So that one had a pretty significant price drop. But let's take a look at original list price to what it sold for to see if there's any really big deals in those foreclosures or not, okay? So we had 1.85, it closed for 1.485. We had a 535 that closed for 475. We had a 1.05 million that closed for 970. We had one that was on the market for 149. It closed at 160. We had another one that started out at 770, closed 768. There's another one that started out at 415. It closed at 310. I don't want to go too much more. I just want to give you a flavor. So what you're seeing is some of these did have significant price drops, like almost a $400,000 price drop on this Pompano Beach single-family home. That's pretty significant, right?
Yeah.
That's like
25% discount.
25% discount, which is really, really good. But a lot of these foreclosures, if I kept reading them, some are selling for more than what they were asking when they started at. And they had bidding wars. And some of them are getting like a 5% drop. 5% drop you're getting on regular homes right now anyway. 5% drop meaning 5% less than what the list price is at that moment. So you're seeing that happen. But are you going to get a huge deal on these foreclosures? Maybe. But you can't just assume that you're going to go in and look at a foreclosure. It's on the market for $1 million and you're going to buy it for $600,000. And if the bank is doing that, it's because the house is trashed and they need huge work. So while these foreclosure statistics are not anything to really be concerned about other than gotcha news headlines, 21% increase, blah, 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 blah. I don't really think there's a lot to worry about the whole big market, but I do want to talk about the hundreds of people that are in foreclosure that might be listening to us right now.
Well, and uniquely you though, if you're listening and you're starting to find yourself in a position where you may fall into this really rough financial situation, always remember FloridaTalkRealEstate.com. When we talk about a team of pros, we've been through a bunch of these markets, the shifts, dealing with foreclosures. Short sales really got this show started 14 years ago. This team developed amazing kind of pathway for so many people that were struggling to get options in your situation. Like, it wasn't necessarily just foreclosure. And getting ahead of things is important. So don't let your pride get in the way. And that seems to be a holdup for a lot of people. It's just pride. I don't want you to see my financial situation, but that's what these pros need. They need to look at your situation to see what your options are. But if you can get ahead of it a little bit, just don't bury your head in the sand. I want to make sure that is not an option. Okay. But if you're getting there, you don't have to wait until the notices are showing up to look into it. You can look into it a little ahead. Maybe be proactive if you see it coming. FloridaTalkRealEstate.com. FloridaTalkRealEstate.com. You want to do a reset and get back to it, or keep going?
Let's go ahead and do reset. Then we're going to slide more back into this a little bit, because the next thing I want to talk about is if you are in trouble on your house, or you think you're going to get in trouble on your house. You're not in trouble yet, right? But you know it's coming. Oh my God, I got 3 months to figure out what my plan is, and if not, I'm not going to make my mortgage payment anymore. Okay, you got to listen to the next segment we're talking to. We're going to make sure that you don't get scammed, and that you have the best options available for you. And it doesn't necessarily mean you got to sell the house.
That's
okay,
right.
so we have a lot of other options, but we don't want you to get ripped off, because there's a lot of rip-off scam artists that are coming out of the woodwork right now.
Well, and that's the stuff you start seeing, the headline grabs, right? And then what slowly comes is, because it's indicative of what might be coming. And what's indicative is the credit economy is getting stretched. Everybody's going through it. And this stuff's going to start showing up in your mail. You're going to start getting these links. Hey, we can save you right now. And it feels so good. We're talking about ways to really protect yourself. We'll get into that and so much more. An hour remaining. Always remember FloridaTalkRealEstate.com. Write it down. Know it, use it, love it, share it. On Facebook and YouTube, again, share away. You can change lives, including your very own, with the pros of FloridaTalkRealEstate.com. Jimothy's used the team many times over the years. Myself, my family, friends. There's a reason we're here on a Saturday. Yes, they're paying us to be here. But we would not be here on a Saturday just to get paid. Well, maybe we might. We might.
Gotta be honest.
Yeah. 14 years, though. I mean, we still might. Yeah. But it's easy to show up and get behind this team because, and speak so proudly of them, because they're amazing at what they do. They work cohesively together, but they care about your outcome. It's what it's about. The money always comes. Your outcome's what's important. It's what leads this team. They'll get paid, believe me, because when it works out well for you, they get paid. That's how it works. FloridaTalkRealEstate.com. FloridaTalkRealEstate.com. 4-minute break. We're back. It's Real Radio.
The bad news, the brain isn't all that great at hearing stuff and remembering it. The good news, you can watch us too. Like and follow us on Facebook, Instagram, and Twitter at Real Radio 92.1. Here's the latest with weather on Real Radio.
I'm meteorologist Charlotte Carl with CBS 12 News. We are going to continue to watch as clouds roll in. Temperatures won't stop climbing, though, until we get the showers and storms to arrive, which will be around 2 or 3 p.m. this afternoon, just depending on where you are. We will see heavy downpours later today, and then by dinner time and the time the sun sets, skies will start to clear out.
This report is sponsored by Aleve. At some point, body pain may creep in and become your reality that day, but Aleve is here to keep you moving. One pill gives you up to 12 hours of body pain relief, so don't let pain hold you back. Try Aleve today. Use as directed.
Hey, it's your boy Johnny C here, host of Florida Talk Real Estate. They're tops when it comes to helping people buy and sell houses, but Florida Talk Real Estate is so much more than that. For 5 years, I've watched these guys help thousands of our listeners with any real estate need. They couldn't do it without their sponsors, who are experts in their fields. Check it out. Jim DePola, powered by Keller Williams Realty. Their team specializes in helping people sell their house for top dollar, and buyers get great deals on the purchase of their home. That's what they did for me and my family, and I couldn't be happier that I hired them for my real estate transaction. Mike Rao from the mortgage firm is one of our favorite guests on the show, and he is the mortgage guy. Whether you're looking for a refi or a mortgage to purchase a new home, Mike Rao will get you the answers you need. The mortgage firm is licensed to do loans in Florida, Alabama, Tennessee, and Georgia, and they have local offices that cover all of South Florida. So if you're thinking about a refi or a new mortgage, go to the mortgage guy, Mike Rao, and find out what he can do for you. The Mortgage Firm, Inc., NMLS 189233, Florida license MLD 78, equal housing lender. The law office of Paul A. Krasker has been specializing in real estate law for nearly 25 years and has the professional team you need. Upside down with your house, Paul's team can help you conduct short sales, loan modifications, even if you're behind on payments. They also help you with foreclosure defense and bankruptcy. They can even help you get a student loan modification and repair your credit to get the score you need. Paul's full-service team has helped thousands of our listeners, and they can help you too. Trident Title LLC is the largest privately owned title company in Florida. When you need a title company to complete a refi, home purchase, or sale, Trident Title has got you covered. Not only do they offer competitive pricing, Trident Title has attorneys on staff to make sure if you have bumps in the road declaring title that you can get the job done. Beware, not all title companies in Florida have attorneys on staff. Trident Title does and complies with all the new federal regulations released last year. Ross Camaronets, owner of Brightway Insurance, has been helping our listeners get great rates on homeowners insurance plans. Haven't checked your homeowner's insurance policy in a while? This is a great way to help reduce your monthly mortgage payment. Ross can also help with renters and auto insurance. Ross is only a phone call away and can usually get the answers you need same day.
Call Ross today at 561-425-6228 or drop by his office at 873 Donald Ross Road in Juno Beach.
So now you know why I'm happy to be part of the Florida Talk Real Estate Show, the longest running real estate show in Florida. And all these sponsors are just a phone call or a click away. Just call 888-973-7828. That's 888-973-7828. Or go to floridatalkrealestate.com. That's floridatalkrealestate.com. And don't forget to use the most accurate search engine to find your new home or ask for a free home valuation because floridatalkrealestate.com has you covered. That's floridatalkrealestate.com.
From the Anajar and Levine Accident Attorneys Studios.
Have you been in an accident? Call Anajar and Levine Accident Attorneys at 1-800-747-FREE.
That's 1-800-747-3733.
Real Radio 92.1 is WZZR West Palm Beach, an iHeartRadio station.
Make us the #1 preset on your car radio and on the free new and improved iHeartRadio app. Listen for all your music, radio, and podcasts. Free never sounded so good. This is Florida Talk Real Estate with Jim DePola and Johnny C. Got a question for the show? Call us live at 1-877-927-6969.
If you choose to dial that number, the first voice you'll hear, it's our producer extraordinaire. There's Jimothy. What's up, my dude?
Hello, hello, and good morning.
Good morning. He'll line you up there. Questions, comments, concerns in the world of real estate. If you just want to be involved in the conversation at hand, bring something else to the table, you're welcome. Do just that. Always remember FloridaTalkRealEstate.com. If you're not comfortable on the radio, you still have access to the entire team. Pros. Like the pivotal cog of the Florida Home Pros.
Good morning.
Chris Peterson over here. What's up, my friend?
Doing great.
I'm glad to hear it. If you don't believe it, you can see it. His face is shining. He's doing great on this Saturday. Join us, Florida Talk Real Estate. That's Facebook or YouTube. Live stream's happening. You'll see me there as well. Jimothy, are you on screen?
I am this week, yes.
Good. Jimothy's right there.
Yeah,
Hi,
we like to have 4 cameras set up, so when there's only 3 on that side of the glass, we pull it.
Yeah, I don't really see. Well, I guess I can, but I don't see you. Interesting. But Jimothy's there, and of course, Jimmy D, our fearless leader. He runs that Florida Home Pros team. That's the team that the pivotal cog is on, by the way. Yeah,
pivotal cog.
Yeah, pivotal cog. Innovations. How you doing there, Jimmy D? Jim DePola, how you be?
I'm doing good. We just were talking before the break. We were talking about foreclosures and that there's a lot of headlines showing that foreclosures are on the rise, and they are on the rise, but it's like going from owing 3 cents, and then if it increases by 100%, you owe 6 cents, right? It doesn't really matter that much. So the foreclosures really aren't as bad as everybody's saying right now. They are going up though, but it isn't any kind of crisis or anything to be like, oh my God, the sky's falling.
It's a crisis if it is for you.
Right. But if you're in trouble, it is a real crisis.
That's right.
And that's what we want to focus on in this segment just real quick, which is, as Johnny mentioned before the break, we cut our teeth on low mods and short sales back in the day. when 40% of every home that was on the market was either a foreclosure or short sale. Right now we're at 2.5%. Right, so we're not at these big numbers that we had during the Great Recession. But during that time, there were so many scam artists that came out of the woodwork. And here are some of the things that you should be worried about, because when people are in foreclosure, they are desperate. And when they're desperate, they're looking for any lifeline that makes sense, that thinks they're going to pull them out of the problem. And that's human nature, and that's normal. But unfortunately, we live in a world where there's a lot of people who really don't care about you, and all they care about is making money off of your bad situation. But they're not going to present it that way. A lot of these people call themselves, like when I started working in short sales and foreclosures before we started this show, the company I had was called Florida Homeowners Rescue and Homie to the Rescue. And we really were there to rescue you, right? And we didn't charge you any upfront fees. We were like, we don't get paid if we can't help you out. The bank has to approve everything we're doing. And we were doing it the right way. And if we can't help you, we're not going to charge you anything afterwards either, right? But there's a lot of people out here right now that are going to try to do things where they're going to, quote, try to save your property, and I'm putting that in quotes, but at the same time, they're going to try to take control of the title of your property, especially if you have equity, because that way, if they can't get the job done with the bank, they're just going to take over your property. You're going to think that's great. But if you have a ton of equity in your property, you could have avoided dealing with that person at all. And if you had to let go of the house, you probably could have sold it and made way more money than working with this rescue firm.
Equity positioning is key if you are finding yourself falling behind on your payments. Yeah.
And in this market, I believe that what we're going to see is completely different foreclosure market than the last market, because the last market, nobody had equity. Everybody was 50% upside down, 80%. I'd sit down with the family and say, your house is worth $90,000 today, but you owe $295,000 before you got in trouble with your mortgage, and with all the garbage fees and everything the bank charges you, you probably owe $325 right now. Your house is worth $90. Do you want to keep the house or sell the house? And they would say, I want to keep the house. Not everybody, but a lot of them. I want to keep the house. I don't want to give up my house.
Sure.
I have memories here. I raised my family here. My kids go to school here.
A lot of people bought that house with the intent of staying there, too.
And I don't blame it. It's heartbreaking. But when you're doing that, you have to be prepared to pay 4 times the amount, in my example, 4 times the amount of what the house is worth in order to keep the house. And sometimes it's better to rip the Band-Aid off, let that house go, walk away from the debt-free. That's a really key thing, because there are times where the bank will allow you to take what is less than is owed as payment in full. That's called a short sale. But they have you fill out a form where you got to pay income tax or capital gains on the money that was forgiven from you, which is a really big deal. So here's my advice to anybody that's in trouble. Please give us a call. We're not going to charge you anything. You're not going to pay us a dime unless we figure out a plan that's going to work for you. We're going to figure out everything, all the options you have, not just one-time option. When I got in trouble with my house many, many, many years ago during the Great Recession, I went to a bankruptcy attorney. What do you think the bankruptcy told me to do?
Well, your best option would be bankruptcy.
Right.
Yeah.
And I went ahead and did that. And what I found out later is that I had all these other options. This is before I was a full-time real estate person. I had all these other options that could have been way better for me than filing bankruptcy and destroying my credit and my ability to buy a new home for 7 years afterwards by going through that way.
No, ideally you have options, and then you determine what's going to be the best path moving forward for you and your family. Yeah.
So it's really important that you talk to somebody that has all the options available to you so that you know all your options, not just one option that could work. And the other thing is, it is illegal under federal law for anybody to charge you upfront fees to do something about your foreclosure. So if anybody's coming to you is like, hey, I'm going to try to save your house through a loan mod, and we're going to negotiate with the bank, and we're going to get you a lower mortgage payment so you can make your mortgage payment affordable, that part's all legit, right? Low mods are real, okay? But if they say to you, and all you have to do is pay me $2,000 up front or $500 up front, here, and sign all these documents. Go running away into the night, call somebody reputable and find out what your options are. We promise we're not going to have you sign anything with us unless you decide to sell the property. Then we're going to sign a listing agreement, okay?
Right.
We're also going to have you sign all these other forms saying if you decide to sell the house and the bank doesn't want to work with you and you decide that it isn't in your best interest in the middle of the process not to sell the house and you change your mind, we will allow you to do that and not charge you any fees because we're trying to figure out what's in your best interest. And if we're trying to sell the house and you find out that the bank offers you a loan modification that would really work for you and your family, awesome. We shut down the sale of the house and we move over to the other thing. The other things you have to worry about when you're in foreclosure is that time is of the essence. And like what Johnny says, there are so many people that lose so many sleepless nights and are sometimes even afraid to even talk about their situation with their spouse or family members because they're so embarrassed and terrified of what's happening.
Yep.
And they can't even sleep and they just are just totally miserable. Totally understandable, but it doesn't have to be that way. The faster that you jump on this and try to start working with the bank and not look at them as an adversary, and the faster you do that, the more money you will save, the better results you will get, as opposed to calling up and go, hey, I haven't made a payment in 6 months, and they filed foreclosure against me 3 months ago, and I don't know what to do.
Yeah, because now there may not be options, and it's a race against that clock that's set on your foreclosure.
It really is.
Yep.
So if you're in trouble, I promise you that almost everybody that talks to us, this is very common. They call us up, they're total panicked. They don't even want to call. It's like their fingers weigh 800 pounds while they're dialing the number, right? Because they just don't want to make that phone call to us. We talk to them for 20 minutes to a half hour. When we usually come up with a plan over the phone. If we don't have the plan over the phone, we know what research we need to do to get the plan. And then what happens is when we're done with the phone call, and you've seen this, Johnny, many times, where the people say, wow, I can't believe how much better I feel right now.
Sure.
And it's like this whole heavy load that you've been carrying by yourself just goes away because now you're giving it to the professionals to figure out to help you figure out what's best for your family. I stopped there because it isn't me telling you what's best for your family. It's me to give you the options.
That's right.
So that you could decide what's best for your family. Whatever way you want to go, we could do it. Now, how does that happen? Well, if you need to sell the house, we're realtors. That's how we're going to do it. But if you don't want to sell the house and you're like, I really, really would like to save the house if I can, well, then you're going to try to do a loan modification. That's where you're going to the bank and you're renegotiating the terms of the loan to give you a lower mortgage payment. And there's certain federal regulations that the banks must follow in order to offer you the opportunity for loan mods. And how we do that is we have you go to the law office of Paul A. Krasker, KraskerLaw.com, if you want to check it out. And they will negotiate for the bank for you. Once you start working with us, you rarely have to talk to the bank at all, right? We're the ones that are handling everything. So that a lot of people are just afraid to even pick up the phone to call the lender.
Yeah.
And a lot of times they'll tell the lender stuff that they probably shouldn't tell them in order to get the best results.
Well, and sometimes you think going to the lender is the best way. And if you're savvy and you know what you're doing, I guess that could be the path. But if you're not, you got to go to people that are savvy and do know what they're doing.
So if you are in trouble with your mortgage right now and you're saying, this is exactly what I'm going through, and this guy that's on this radio show, I don't know who the heck he is, but that's exactly how I'm feeling right now, pick up the phone and give us a call right now. You don't have to give us your real name. We'll go over some of the questions that you might have right now. It would be a really great teachable moment for other people listening that don't have the guts to pick up the phone and call.
877-927-6969.
So give us a call. We'd love to talk to you if you have a problem with your house and see if we can help you find a problem, solve a solution to your problem.
That's right.
As opposed to the last thing that you want to do is just let your house go into foreclosure. If you let your house go into foreclosure, you just give up. I've seen people where they moved out of the house because they just knew they were never going to make their payment anymore and just disappeared. And the house sat there for years before the bank took it back. And the family just left the house
Just
early
ghosted it, yeah.
because they just felt, hey, I'm never going to be able to make this payment. I guess I got to get the heck out of here. Those people, the last thing you want to do is just let your house go into foreclosure where the bank takes total control over what's going to happen to your financial future. They're going to sell the house. They're going to spend all this time suing you to get the house back so that they can sell it on the open market, either on the MLS or through an auction. And then the mortgage payment's paid off. If there's an HOA or condo board, all of that stuff got to get paid off. Then they got to pay off any of the late taxes that have not been paid. Then when I call all the garbage fees, all the attorney fees that they use to file the foreclosure on you, the late fees, the accrued interest, the penalty fees, the recording costs for all the stuff they got to file in the county records.
So much.
All that
Those
stuff
numbers
starts
add up.
adding
Oh,
up.
yeah.
And then when you're done, if your house doesn't sell for enough to pay all of that stuff off, whatever's left over, you were legally responsible for as a potential tax event for you, a taxable event. So not only did you lose your house and your credit's destroyed, now you owe the IRS tons and tons of money because of the way the bank handled your case. Don't let them take
do it,
control of
yeah.
your life. You got to take control of your life. And you do it by starting just one way. You pick up the phone and you get the guts and you pick up the phone and you go, hey, I need help. Can you help me? It's that simple.
It is.
Okay.
Yeah. Don't let pride get in the way. If you know you're going down this situation, get ahead of it as best you can. FloridaTalkRealEstate.com. Just fill out the contact page. You can pick up the phone directly. You could probably even just reach out on Facebook and be like, hey, can you DM?
For sure.
There's plenty of ways. We'll work around whatever it takes for you to get in touch, whatever it takes for you to find some guidance, some understanding, some solution options, potential options. That would be the best case scenario. Let's get you some options. Don't wait. Time is of the essence. FloridaTalkRealEstate.com.
We did this, I don't know if it was early this year. No, it was last year. Late last year, we had a property in Port St. Lucie. I was trying to sell it. It was an investor special kind of thing. And the person that was living there, she had stage 4 breast cancer.
Mm-hmm.
She couldn't work anymore. She was basically a shut-in because she lost her car because she wasn't working. She couldn't make the mortgage payment. As I was trying to sell the property, I was trying to get way more money than the property was probably worth because she didn't have a dime to her name. So whatever she made off the house, that's what she had to live on. And I kept thinking to myself, if this house sells, where the heck is this person going to live? I don't know how she's going to live after this. I don't want to make her homeless.
Right.
So I told her, she mentioned to me that the bank offered her a thing called a loan modification. She didn't even know what it was. And I said to her, look, we're going to continue to try to sell the house, but you should work with your bank. Your bank is communicating with you and saying, hey, we want to see if there's a way we could save this house for you instead of taking it back in foreclosure. So I kind of gave her a little bit of advice. She did most of the work herself, but she walked through that whole loan mod thing, and it took about 90 days. We were still trying to sell the house, couldn't find the right buyer. And then we found out that the mortgage payment that they came up with worked perfectly with her fixed income. So we shut down the sale.
Great.
But we waited until she made 3 payments on time because the loan mod doesn't really become permanently in effect until you make 3 payments on time. She made her 3 payments, direct withdrawal, set it up that way, and got to save the house. So we do this all the time. It wasn't like we were just doing it because we were in the Great Recession. This happens in real life all the time because 1% to 3% of people get in trouble with their mortgages in just natural life.
Right.
So I was really glad to help out that customer and help her save the house. I lost money on that deal because I had to pay for advertising and the sign out in the front yard and all the advertising we did. Oh, I don't even want to talk about that. Yeah, if you count the time and anything, I took a bath.
Yeah.
But you know what? It was the right thing to do, and it worked
the right
out. And hopefully that person, if they ever saw other people, they would tell me.
I hope that works out for a while because there's going to be a lot of repair needed before long too, huh? If I'm remembering right.
That house?
Yeah.
Oh, it was a hot mess already.
Yeah.
But it was a place for her to live, and she was comfortable there, and her pets were there.
Yeah.
and she really wanted to stay.
Yeah.
So
It worked out.
yes,
She could afford to stay.
what I told her was that she could just fix up the house a little bit, that she could turn, she has 3 bedrooms. She could turn one of the bedrooms into a rental,
Yeah.
and she'd still have an extra guest room.
And slowly start chipping away at some, fixing it up a little bit.
Yeah,
Yep.
so there were options for her, but we are here to help you, not here to profit off of you. We're here to help you. We will make some type of money if we end up performing for you.
Of course.
But we're not going to charge you anything to find out how to do it. And there's sometimes I might say, I don't know if we can help you, but I'm going to be honest with you, okay? And if we can't help you, we usually find people that can, right? For sure.
Try to, at least.
So we do. We try.
That's right.
Thank you, Johnny, for allowing me to go through all that. So now let's talk a little bit about the economy.
Let me just do this.
Oh, I'm sorry.
877-927-6969. Plenty of time remaining. If you'd like to join the program, don't be shy. Jimothy's dying to get you on the air.
Oh, yeah.
Of course.
Bored over here. Keep
Come
him
on,
busy.
Keep them busy. If you're not comfortable on the radio, I understand. Remember, FloridaTalkRealEstate.com. Consume away on Facebook and YouTube. Lots to consume. Share and like. You can change lives with the pros, including your very own. Trust me. It's FloridaTalkRealEstate.com. FloridaTalkRealEstate.com.
Thank you. I forgot to mention last week that this past week, I forgot to say last Saturday that this week we had the Fed Reserve meeting. I forgot to mention
It was
that on
Wednesday,
the show.
right?
It was Wednesday.
They did nothing.
And they did nothing. They held tight. But what was interesting about that, the meetings of the minutes show that they didn't have a unanimous decision this time. There's 12 board members. I always thought there were 13, but it said 12 in the article I read, because 12 is an even number.
13.
He's chair of the
chair is
13th, because you have to have an odd number in order
Yep.
in order to vote. But anyway, they decided to hold tight on the interest rates, but 3 of the reserve people were saying based on what their constituents were in their states. I think one was Minnesota, one was in Dallas, the Dallas area, and there was a third area. And those 3 Fed Reserve chair people for those regions were saying that talking to their business owners there, they were saying that they didn't see inflation coming down anytime soon based on the complaints they were getting from the business owner about costs for materials, costs of goods. So they were saying, we think we should raise the interest rates a quarter point right now and kind of do it a very smooth way. Instead of doing something dramatic, raising it 3/4 of a point or a half a point, let's get that quarter point in right now and see how the market changes or doesn't change and see. And if we need to tweak it back again and take the quarter point away, that's great. And if it gets worse, at least we're on our way to start curbing the inflation. And maybe we have to do other hikes in the future.
I was a little bummed there wasn't a little more support for that.
Yeah, me too.
Yeah.
And I agree with you. And they decided, the majority of them decided, no, we're going to go with no interest rate increase.
We're going to just keep doing what we're doing. Yeah.
The other thing that was interesting about that meeting was that the chairperson, Warsh, his name is Warsh now, it used to be Powell, he said that he kind of is leaning towards a rate increase if inflation doesn't get much better, but he just didn't feel like right now was the moment. Now, the other thing that he said that I thought would be kind of interesting, it doesn't seem like a big deal to laymen like me, but apparently it is a big deal, that they usually have a minimum of 8 Fed Reserve meetings a year. So about every 6 weeks, they're having a meeting. Now Warsh is thinking that reducing that amount of meetings, that we don't need that many meetings every year. Now, the reason why that might sound, well, what big difference does that make? If you reduce the amount of meetings you have every year, if you make a decision like whether to increase the rate or not increase the rate, and then things go wrong, you have to wait longer for the next meeting.
Yeah, that's why that's a bad decision, because again, if you know you're on the wrong train, it costs more to get back the longer you wait on it. And you gotta make sure you have as many exits as possible to get off and let's get back on the other side.
Yeah, so I agree. I agree with that. However, we have seen in the past, Johnny, I think it was around 2018-ish, where they had special extra meetings that weren't planned out. So I guess they could always go back to that.
Them from just being like, hey, this isn't going well. Emergency meeting.
Yes, exactly. So
Right.
maybe that's the way they fix it, and maybe
They
that's
just don't
the fix.
plan for as many, but
on an average year, it's probably not a big deal. But when you have those instances where things are changing quickly,
Yes.
you're just not enough time to adapt.
Yeah. So the Fed Reserve is like saying, hey, inflation is definitely not slowing down. It isn't getting to that mythical 2% that we've been trying to get to since.
Did anyone think that we were going to get there anytime soon?
Well, actually, to be honest with you, towards the end of, trying to think, towards 2024, we went from the 4s all the way down to
For
like
sure.
2.78 or something like that, right? And I was thinking, wow, we're getting there. We got into the 2s. We're in the 2s, but not 2.0.
Yeah.
And that's what they wanted to be. And we were getting there. It was consistently going down month after month after month for several months in a row, like 6 or 8 months. But then it started going up. And really, when it started going up was the tariffs and then the war, right? And now we got tariffs coming back. And that's what the Fed Reserve is saying. The reason why we don't know what to do is we're very concerned about the war. And the tariffs earlier, when the original tariffs were put in, that affected everything. And now they're bringing it back again.
Well, and we know tariffs, Supreme Court says you can't do it. There's big payments back to the companies for the tariffs, which is
but not
odd,
the people.
But not the people that paid for it.
So you're like, oh, so this is just a workaround to give these corporations just taxpayer dollars on top of what we already paid them. So now we're adding more tariffs, which the Supreme Court already said you can't do. We know the end game to this. At the end of these tariffs is another big chunk payment to these corporations to be like, sorry, these weren't legal. What are we doing?
So the part I don't get, I totally understand. It's very disappointing to me.
I've been down this road. As you're like, this is familiar.
What I
We
was
just
saying
went
when
down
the
this road.
original tariffs came out, what I was saying was, look, they're just not, the politicians just aren't being honest with you, because what they're doing is they're trying to pay down the debt by having consumers pay more in tariffs, right? So, but I don't even think they use that money to pay down the debt.
Well, it doesn't. It was
No, they
$39
could
trillion.
No, they would. No, they could use that. The tariffs are a tax. So what would happen is if you had higher tariffs being paid,
Well, you could, but it doesn't.
and they were
It
passing it
happened.
on to the consumer would pay the normal retail thing. The supplier that was selling this stuff, they would pay more money, pass it on to us. So basically, the consumer was paying the tariff.
Of course.
And if the tariffs were used to pay down the debt, which I thought was what the point was, but now I realize that
Didn't
that
have
wasn't,
it. No.
didn't happen. They just spent the money other ways. So
Well, and then double dipped and then got reimbursed for the tariffs that we paid for. Again, I had no
Yeah.
sense in
It-
bringing
it-
it up more.
to me,
We
it
could
doesn't.
talk hours about it.
Yeah, that part.
Yeah,
that
that's
part
a
is
tough
very
one.
confusing. But so with the economy right now, what we're seeing is that we can't get rid of the inflation. Now, unemployment right now, we're still at 4.1%. We've been hovering between 4.1 and 4.4% for many, many, many months now. And that's an excellent unemployment rate. I remember when Clinton was below 3%. Now, this is a long time ago. I'm an old guy. But when Clinton had unemployment that was below 3%, everybody was freaking
The
out.
Clinton Gingrich years were awesome for this.
Yeah,
country.
they actually were.
Newt was a star.
We had a balanced budget.
Yep, Newt was
Right.
a star. Clinton worked well. Those are good years for this country.
Yeah, it was. But what happened? What happened was besides unemployment, one of the things that's concerning me about unemployment, I'm getting more and more calls now from people that are in trouble, which I haven't really got a lot of financial trouble calls lately, over the last couple of years, but now I'm seeing a little bit more. Like they're starting to pop up more and more, and I think this might be a little canary in the coal mine thing. But also, there's so many people that have been written off saying that they've given up about looking for jobs at all. That gets me very concerned.
Yeah.
Because it's a significant amount of people. I think it's like it would add 2% to the unemployment rate if they counted all those people back in there. And then we'd be in the sixes. And if we were in the sixes, that really isn't a great unemployment rate, the sixes.
Well, if
Fours are excellent.
If that's the reality, though, I mean, the psychological aspect of the number, we'll see the effect of it. But I don't know. If they said it was 6% tomorrow, they're like, oh, it's actually 6%. Do you think you have a different outlook on our economy? I don't know that there's a difference. It's a facade if you want to float it out.
I think
there.
it matters. Well, obviously, it's a big deal for that 2% extra of people because what is?
But there's the reality of it. We call it let's say 1%
Sure.
right now. Where the economy is what it is, whatever percent it is right now, right? Whether you recognize it for what it actually is, or we just have this fictional number.
How much would the impact be on the average person
just a
that's not directly
psychological
affected? Yeah,
impact.
no,
Yeah, I
for
mean-
sure.
Now, related to all this are the current interest rates. What's happening to the current interest rates, right? Because we know the Fed Reserve rate is not a direct correlation to what happens with interest rates. And the two things we have to look at about that isn't just what's happening with the Fed Reserve, but we also should be looking at the 10-year Treasury bill because that is closer to what's happening on the moment to moment of where your interest rate is if you're buying a home or refinancing. It's going to be that 10-year.
Yeah,
That's
right.
going to be the real indicator. And what I learned, because I didn't really keep up on that too much until this year, what I learned by doing the research is normally if the 10-year reserve is at, I'm making up a number, let's say it's at 4.4%. I just lost my computer.
Oh no! Did you unplug something?
I don't think that it was charging. I think we lost the whole thing. That's totally up to me. That's so weird that happened. It's okay. So I lost all my research and everything too. Sorry. So with the 10-year Treasury bill, let's say the 10-year Treasury bill shows it's 4.5%, right? I think it was 4.7 for real last night. But if it was 4.5, you should expect your interest rate on your mortgage to be roughly 2 points higher than that, like 6.5, right? Now, it doesn't have to be that way. If we see that the 10-year Treasury bill is 4.5, but the actual interest rate is 7, 2.5 points higher, what that's telling us is that people are concerned that the future of the economy is much shakier than what the Fed is doing. It's like an incongruous opinion of what between the Fed Reserve and the people that set the 10-year Treasury bill.
Right.
So, and I shouldn't say the people that set the 10-year Treasury bill. That's based on all the people doing all
That's
the
the
different
market.
type of
Yep,
loans.
that's the
and
market.
everything. So how the market's going.
Yep.
So right now we're about the 2%, 2% higher than the 10-year Treasury bill. This Thursday we hit a number that is kind of funny. Our mortgage rate this month or this week was 6.66. Right? It's a 6.66 every time.
Let's hope that's not a bad omen.
Yeah,
for
exactly.
what's on the horizon.
Now that's the highest interest rate we've had for 52 weeks. So it's the highest we've had for a year. Now, we're still hovering between that. We've also had 4 interest increases over the last 4 weeks. So for 4 weeks in a row, we've had interest increases. Started out at like 449. I'm doing this 649. I'm sorry. We started at 649 and now we're at 666. So even though we've had 4 increases, they weren't dramatic increases over the period of time. We're not even, I think, a quarter point above where we started, or maybe barely a quarter point where we started. So that means that a buyer would lose about 2.5% of their purchase power if they were looking for a home and they started at 649 and now they're at 666. They'd lose about 2.5% of their purchase power right now.
And I think that drives for every on an average median home sale, like a medium home price of like $450,000. It's about a $40 a month impact on your mortgage.
Yeah, so it would cost you about $40 or more for that quarter point. Yep. So that's what's happening with the interest rates and what's going on with the Fed and unemployment. I keep saying we're going to know that we're going into a very severe financial crisis, if you will, is when the interest rates, when the unemployment starts getting higher. If we start seeing that unemployment rate jumping up to, I haven't really figured out the magic number yet, but I used to say 6, like 6.0. but now I'm thinking even 5.5. If we were that kind, like it depends, I guess, how fast we got there. But if we got to 5.5 in like a month and a half or something, or 2 months, that's going to be bad times, because what's going to happen is there will be a lot more people that can't afford their mortgage, which means that there would be more houses coming on the market than the buyers that are out there because unemployment's higher, right? And then that would mean we would start seeing price depreciation, which we have not seen in South Florida. No matter, you could talk about how the foreclosure rate spiked 21% nationwide. Palm Beach County median single family home was 700,000 last month.
Wow.
700,000. We hit that now 3 times now.
Wow.
So I remember we hit it last year for the first time. I
Yeah.
remember looking at it on the show
I
live.
wasn't certain we were going to hit it again.
You hit it 3 times now. So this is becoming more entrenched, meaning like the 700 might have been a blip last year where like it ranged from 630 to 700, right, over the 12 months. And it went up and down in that range.
I
But
thought it would
this
take
year
a
we
little
hit
longer.
700 twice
Huh.
this year, 700 flat twice.
Wow.
And Broward and Dade are in the same boat as that.
Well, it shows you how the market is being, really supported by the upper echelon. I mean, it does, because median is half sold for more, half sold for less, right?
And there's a huge amount of multi-million-dollar homes
Yep.
being sold, like percentage-wise, a huge amount.
Yeah, there was some data that I was reviewing last night too, and there's like this bifurcation that's happening in the market where your sub, the sub $400,000, that range, the sales for those are actually, they've gone down some, versus the over $1 million, that's actually almost inversely gone up. So you're seeing this bifurcation that's happening in the market from the low end versus the higher end.
It's another. It looks like a K-shaped
more
economy.
Ks,
It's a
yeah.
K-shaped real
more
estate
Ks.
market right
Yeah.
now. It really is.
Huh.
And
And kind of understandably, I mean, for the people that are in lower priced homes, if that's what they're required for their, their ability to pay, they're not giving that up because they don't have a ton of other option, right? I mean,
Right.
so it kind of does make sense. And the desirability for a lot of the state and the people, what they want is they want that beach side, they want that lifestyle, and you're gonna pay for it. So yeah, it kind of all does make sense.
it does. And the other thing is some people might be listening to what we're saying right now. It's like, wow, this sounds a lot of gloom and doom, but it is not.
no.
This is a very normal market. We're in a very stable market right now. And that's what people are expecting. Like, they want this big dramatic thing to happen, like where the interest rates get under 4% again or something.
We're in bad times if that happens.
Yeah, that's because we're in a really, really
Yeah.
No,
right.
that's-
So right now, unemployment's pretty steady. The interest rates aren't going crazy up or down. Right, they're fluctuating a little bit, but nothing out of the realm. There's plenty of homes for sale. You got motivated sellers that are actually willing to help out buyers to buy the home. And you know what? The sellers, we had very strong sales in June. So the sellers that are putting their houses on the market, if they do it at the right way,
pricing it the right way, right?
right, if they're pricing it the right way, they're getting their houses sold. So this is not a bad market to be in, whether you're a buyer or a seller. And if you're thinking that you want the market to get better, you know what? You're not being really realistic with yourself as to what the market is. Because if you think this is a really bad market and you're waiting for the prices to increase, we've had price appreciation through this whole time that we've been through, right? Even this year, we're still seeing price appreciation. We're not seeing prices going down.
Well, I'm okay if you're quote unquote waiting for the market to get better. If you know your numbers, if you've already sat down, you understand what you can afford based on your financial reality.
Well, that part's
if
true.
That's
yeah.
But if you're waiting for the market to get better and you're filling in all the blanks on your own, what are we doing? Like you're not even a realistic potential. You're not. But if you're waiting for a specific thing, that means your ducks are in a row. You have an understanding of what you can afford based on this scenario we're in, and you're waiting for a certain thing. That is a legit scenario. But if you are filling in all those blanks, don't do that. Get an understanding of what you can afford, because you shockingly may be a position to buy a home that you desire without understanding exactly what your financials mean. If you're spending $2,800 a month on rent,
you can afford a home.
You probably should have talked to this team already by now. If you're paying $2,500 a month, you probably should have talked to this team by now. Even if you're not, you should talk to this team, see what it's going to take, and then at least you have that goal. I need to wait for that. I need to do this. Maybe you got to improve your credit. Maybe you need to save a little bit of money. Maybe it's all the above. Maybe you just need for a certain price point to hit. Then you have a goal, you have an understanding. But if you're just filling in the blanks, you're not real. You're not really in contention to be a homeowner. But you couldn't literally, I remember, I'm saying it because I've been there. I remember going, I'm never going to buy a home. And Jim's like, dude, I remember we sat outside of the radio station in Port St. Lucie, and you're like, come, please? You have to buy a home. And I'm like, I'm never going to buy a home. And I could never do it. You're like, you can't.
Was it the best decision you ever made?
Oh, by far. But the understanding of how close.
Tiffany.
Okay.
Second best decision.
Thanks for bringing me back to reality. Yes. But
Not even close.
Yeah, you're right. Yeah, my wife's my best decision, and then it's probably like my fourth best decision, but it's up there, top five. But I wasn't ready, but I was way closer than I imagined, and the path to it was really attainable. It wasn't this like I can never do it. I destroyed my credit. I didn't appreciate credit at all. Way too old in life, but it was easier to repair than I imagined, because I didn't have to repair it all. I just had to get a couple of little things better, but I didn't know that. You know who knows that? It's the pros, FloridaTalkRealEstate.com. So it was really easy to get there, and then down payment assistance, and I got all the things I needed. You have to have a team to support you.
I mean, I think that the key message here is that everybody's path is different.
It's snowflake.
Everybody's path has their own set of challenges and obstacles, and that's if there's anyone out there that has a one-size-fits-all approach, you don't want to be working with them. You have to adjust and adapt to what your needs are.
I was just looking. I happened to go into a neighborhood of somebody I know, and they went through a divorce. And then they bought a house out in the Royal Palm, Wellington area. And it was a modest home and everything. It needed work and everything. And I had to go in there, and I was doing comps in that neighborhood. And their property came up, and it's like, oh, that house, and blah, blah, blah. And I started looking at it a little bit. That house, without including the money that was paid down on the mortgage, but they've owned the house about 3.5 years. So they paid like $450,000 for the house back then. Roughly, and 3 years later now it's worth about $550, right? And they paid down the mortgage for 3 years, right? So that helps out a little bit. So they probably have like $100,000 plus a little bit more than $100,000 of equity in the home right now. Now, when they moved in to that property, they had the lowest. They did the 3.5% financing. No, they actually did 3% financing. So only put 3% down. And they were looking at it. They weren't like really happy at the time buying it. They weren't like super excited, but it was better than renting. But now they only probably pulled $12,000, $15,000 out of their pocket to buy that. So if they went to go sell it today, they'd probably have about that 100 after the smoke clears. It might be 85, 90,000, but they went from, I only have $15,000 to put down payment on, to now they might have 90,000 to 100,000 to put on the down payment on a different house if they wanted to do that. And it's just like working up the ladder. You can't work up the ladder till you get on the first rung.
That's right.
Right. So the first home doesn't have to be your forever home. And that's one mistake that I think a lot of buyers make, that they want the first home to be the home that they really envision that they want their home to be. It's like, well, no, really, a lot of times you got to start out with the starter home. Don't you think so, Chris?
Completely. I mean, I've moved a lot, but I've been in a bunch of different homes. But the longest I've ever lived in one house was the house that I lived down in Hallandale. And I think that was about 5 years. Never lived in a house for longer than that.
Right.
And I think the average is closer to around 7 years is what the typical average of a person staying in a home is. So but I fell for it too. When I bought my first house, I thought, I'm gonna own this house forever. No, life changes.
Well, what I also see though is I see buyers saying, I don't want to buy now because I can't buy the house that I want. And
That's the other
sometimes that's
mistake.
okay.
Yeah.
But if you really are in the first rung, trying to get on the first rung, that might not be the move to make. It's better to be in the game and in the process. Now, you're in a different situation, Johnny, because you know the exact kind of home that you're looking for in the budget that you have.
Right.
So you have to weigh all of that. But if you're a first-time person, the big mistake is, I don't want to buy that home because I don't want to live there forever. And really, it's like, well, it's really just to get you into the game, build up your equity so that you can get to the next step.
I saw a news article on one of the TV stations. This was a couple months ago, and it was a single family down. They were renting in Weston, and they're like, we can't afford to buy a house. And they're both, gainfully employed. And it's like, okay, you can't buy the house that you want to buy in this particular neighborhood in Weston. But I guarantee you, based on what your financial situation is, you can buy a home. You have to think about what is the plan, what is your career plan, or what is your life plan, right? And if you set goals that are attainable, then you can step through those things, get into that house, lever, build it to the next one, and go to the next one. You just having that plan is so important.
Here's one of the things I wanted to talk about.
That's the key.
It's the plan. It's the plan.
This kind of turns into there was an article in the Florida Realtors Association magazine. They did a survey where they asked, Wells Fargo did a survey where they asked 2,000 aspiring first-time home buyers, ages between 18 and 65, and they gave them a quiz asking 12 questions about the mortgage and home buying process. Nearly 70% of the people that were interviewed of the 2,000 said that they felt knowledgeable about the home buying process, but 75% of the people only got 4 of the 12 questions correct. Right? So what it's showing is that they really don't know what's really going on. So let me just give you a couple ideas of what they didn't know. Just 25% of the respondents knew when to apply for a mortgage, right? And that is a really big mistake that people make. They usually want to do that after they start looking for homes. Big mistake. And you know why people do that? Because they're afraid of the mortgage process. They're going to be declined, or what they have to do to get the mortgage. So it's much easier to think about the happy thing about looking for the home, but affording the home, that's where the scary part gets. Totally. So 25% of the people didn't even know when to apply for the mortgage. Only 25% knew when to apply the mortgage. Nearly 90% of the people interviewed didn't understand what's involved in the closing cost, which I totally get that, right? Happens a lot. Because closing costs are really 3 things, right? It's your down payment, it is the closing costs, right? Which is if you have a mortgage, to pay the mortgage fees and the county fees and stuff like that, the title search if needed. And then the third function, or the third cost, is prepaids, paying for your taxes and insurance up front as you're buying the house so you can start up your escrow deposit. And a lot of people don't understand where those costs are and how much they are. And the big mistake I get a lot of times, I'm going to be buying a house. It's $100,000. I'm going to put 3% down. So I only got to bring $3,000 to the table. It's like, well, you're forgetting about your closing costs and your prepaids. You got to include that too. Mm-hmm. So people don't understand that. That one I can understand. 88% of the people interviewed were not clear on the first steps to take when beginning the home buying process. They didn't even know what to do.
Yeah, where do I start?
Yeah. Well, you know what everybody starts at? In their pajamas at midnight on Zillow. Clicking and clacking at midnight on Zillow, right?
Start at FloridaTalkRealEstate.com. That's where you start.
80% of the people interviewed would make a critical mistake when submitting a competitive offer on a home, such as sharing with the seller a pre-approval letter with the maximum approval amount. That drives me crazy. I love it as a listing agent, would never do it as a buyer's agent. Thank you, Mike Rao. We don't have to. This is the way his process is.
I had an interesting story on that exact point. So with one of my clients recently, we submitted an offer, and it was exactly for what we were offering. And so the seller was actually concerned that because they wanted to counteroffer, and they're like, well, we want to write in all these extra guarantees that they're approved for the loan. I said, And I was talking to the agent on the other side. I said, we never disclose what our clients are approved for. I said, if you have a counter offer, it goes without saying that they have to be qualified for the loan, but you need to give us that counter offer, and I'll generate a new approval letter, assuming it falls within their range.
Mm-hmm.
And it was a big deal for the seller. Like, it took them an extra day to like respond to us. And I was like, finally, I'm like, what is the number that you're looking at proposing back to us? It was like $5,000 more. I'm like, all of that effort for $5,000.
Right.
So I was like, come on.
I know, it's crazy, right? So the thing with that is what we're talking about, in case you don't understand this. A lot of times a mortgage company will generate a letter saying the maximum amount that you're allowed to afford, right? What you're approved, your top approval for the loan. So if I get a loan approval for $500,000, but I'm turning an offer for $450,000, I don't want to turn in an approval letter for $500,000 to the seller, right? Why would you do that? So we always, because Mike has a special app that we use, we can, whether it's midnight, as long as they can approve for the loan, we can spit out the loan approval letter without even talking to Mike, and put any number in there they want that's approved in the app.
Because your specific numbers are locked into your specific app.
Mm-hmm. So we always take the extra effort to write a new loan approval letter before we turn in the offer that matches our offer. But a lot of people don't do that, and it really makes you weaker.
Sure.
Because if the seller is not happy with your offer, and then you know you could afford a lot more on paper than what is being offered on the property, maybe even more than they're asking for the house, and you come in less than asking price, a lot of times you just say, hey, they could afford more than what my house is being offered at, just counter it full. And it's really hurting the seller, so you don't really want to do that.
No, you don't.
Yeah, that's not a good thing.
Avoid that when possible.
Yeah, so the home buying basics, we're going to be meeting with Joel and his wife and John probably next week. We spend 2.5 hours going over the whole buyer's process. It's usually fun. I know it sounds like a gruel, but we do a lot of stuff in there. We teach you about property taxes and understand how that greatly affects your future mortgage payment.
Sure.
We talk about what happens if you're in a multiple bid situation, how to get the best deals. Is it better to buy a foreclosure or short sale? Or how can we find deals or properties that are being offered where the seller might seem motivated to help you with your down payment and closing costs? We try to include all of that in the process. And then we also, through all of that, we also spend a good hour of that 2 hours looking at properties on the line on MLS, punching in your criteria to see how many properties are available at your price range, and then tweaking it with a million different factors to really barrel down to what you want to be looking at. So we're not driving all over God's creation to look at junk.
Oh yeah.
Just to be out there to look at a property.
I think there's a lot of agents that don't take the time to educate in those types of situations. They're just pushing through to force you to get the document signed, and then we'll take care of all of that after.
Everything else later.
And it makes such a big deal to spend that time up front. That's so important.
Yeah, to
That's
make a
comfort
smooth
level
process.
as a buyer. I know I appreciated the heck out of it. Just an understanding of what I'm getting into, how and it really lays out how well versed the people you're working with are. You're like, wow, all this stuff I had no clue about. Because there's so much you have no idea about. You got to lean on the people that you're working with to know how to handle all of it. You might have friends and family, people that you love that are in the field. Vet them if you're going to use them. Please look at the back of the card, check the stats. Just because you love them doesn't mean they are great at what they do, and I'm not saying anything negative about them. Have them at Thanksgiving. Send them the cards. Bring them to the birthday bash. They're amazing people. Why would you not? But vet them. If they're not good at what they do, why would you step into one of the biggest transactions of your life with their professionalism is going to be everything. It's going to impact you massively. I can lead you to somebody. Vet them as well. FloridaTalkRealEstate.com. Have them show you the stats. And they will happily. Because they're very good at what they do. Great at what they do, I venture to say. A team of pros, experts in their field. They work cohesively together, have for years. They're going to get it done for you, one way or another. They're going to die trying if they can. Options galore. FloridaTalkRealEstate.com. Know it, use it, love it, share it on Facebook, on YouTube. Get you some. Share it. Change lives. Jimothy, you're the best. Thanks for everything, dude.
Thanks, Johnny. Have a great weekend.
I will. You too, please. Johnny C, that's me. I hope you have a great weekend. Chris Peterson, pivotal cog over here of the Florida Hope Pro Steve. So good. You're the best. Have a great weekend, man.
I will. You guys too.
And Jimmy D, our fearless leader, Jim DePola. Have an excellent weekend as always.
Can you tell Jimothy was bored this week? I like it though.
Yeah.
Happy South Florida, everybody.
You got to piss Mike off, though. So
I mean, there's always the.
Oh,
yeah, that's true.
Hold on a second. Totally shot right past that.
I forgot about that.
I did too.
Yeah.
I don't play it every week,
You
but
don't.
every night.
It's going to be a competition now.
Yeah. Okay. Yeah.
Oh, he's definitely coming in here. Like he's going to do a bunch of push-ups before he walks in. Look all swolled up. Oh, that's right. Totally forgot about that. Always remember, FloridaTalkRealEstate.com. Don't be forgetting that on Facebook, YouTube, share, like away. Thank you very much for being with us on a Saturday. We might have very special guests next week.
I hope so.
Yeah.
I don't want to
fingers
announce
crossed.
it yet.
Yeah, I don't know, but it could be a really, really interesting conversation about
Yes.
the future of what the effects of maybe
Florida property
reducing
tax
property tax in
elimination.
Florida. Yeah. Not a political talk, a reality number-based talks on what would impact be in our county, specifically Palm Beach County.
It would be interesting to see that because a lot of people don't know. I don't even know.
I hope that happens. That'd be a good conversation. We're not going to get any opinion.
No.
We're going to get facts
No.
because that's what this person deals in. I hope we get that. But soon, if it doesn't happen next week. Thanks for being with us every Saturday. I invite you to stick around. Me and Greek, we're going to squeeze out some sports, and we'll be back next Saturday. Florida Talk Real Estate, right here on Real Radio.
What's a Real Radio podcast? It's Real Radio on demand. Find your favorite show at realradio921.com.
Kick off the school year with Kohl's Friends and Family Sale. Because with 20% off styles kids love, they're not just going back, they're making an entrance. Save on jeans that turn hallways into runways. Tees that make them walk a little slower, for effect. Sneakers that say, I'm so back, and more. Plus, enjoy a sales tax holiday in Florida at Kohl's and Kohl's.com. Select styles, 20% offer ends August 2nd. Some exclusions apply. See store.